Hello, and welcome to the Virtual Investor Conferences. My name is Athena Katsoulis on behalf of Social Suite, our ESG sponsor, as well as the OTC markets. We're very pleased to have you join us for our next live presentation from Arizona Metals Corp, a company focused on exploration of mining in copper, gold, zinc, and silver. Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Scheduled Meetings tab found in the conference platform. At this point, I'm very pleased to welcome Mark Paris, founder, president, and CEO and director of Arizona Metal Corp, which trades on the OTCQX Best Market under the symbol AZMCF and on the TSX under the symbol AMC. Welcome, Mark.
Hi, Athena. Thank you very much for that intro, and thank you everyone for attending this update webinar on Arizona Metals. We recently did a webinar about a week ago, and in addition to the OTC virtual conferences, we plan to do a monthly update webinar for shareholders, just to answer any questions on a monthly basis. So I'll give a quick summary of the company for those who are new. Arizona Metals Corp was listed on the Toronto Venture Exchange in August of 2019. We moved to the TSX in October of last year, and also are trading on the OTC under AZMCF. And for the last 2 years, we've been primarily drilling and exploring our K-Mine project located an hour north of Phoenix in Arizona, and our secondary project, Sugarloaf Peak, located 2 hours west of Phoenix, has seen much less work, but we are doing some met work now and gearing up for a plan there. So just to give you some of the highlights, we'll run through the presentation here. And as I mentioned, our K-Mine project, high grade VMS project with copper, gold, zinc, and silver. We believe it has all the attributes you need to create low capital cost, low operating cost, high margin mine in a very safe jurisdiction. So as I mentioned, K-Mine deposit is located an hour north of Phoenix. Excellent infrastructure, but there are a number of things we think you need in these types of deposits. You need a favorable location, which we have. You need the right type, grade, and orientation of deposit, and you need to have regional and local expansion and exploration potential, along with favorable metallurgical recoveries, as well as the ability to advance permitting towards an eventual mine. And in the following slides, I think we'll cover all these aspects and why we believe the K-Mine is one of the highest grade deposits, not currently in operation or being put into operation by a major. Very few of these VMS deposits are left in the world, especially those having both high copper and high gold grades. Most of these would have been, mined out about 40 years ago. By circumstance and a bit of luck for us, this deposit has been ignored for the last 40 years until we started drilling it in 2020. Now, besides the deposit, you need a number of other attributes on a corporate level, and we believe we have those too. So you need a management team with the experience and ability to execute. Our board has many years of experience successfully exploring, developing, and ultimately selling other exploration projects. We made 2 recent additions to the board. One a few months ago, Rosa Arroyos Espinoza and Catherine Arnold was added to the board at the recent AGM. They both add substantial Arizona-specific experience, both mining engineers, and a lot of experience in permitting as well as engineering design of mining projects. Mike Pilmer also recently joined the board. He increases its independence, and he brings years of experience at the highest levels of corporate finance in his new role as chair of the audit committee. In terms of the capital structure, some of the key boxes we think you need for success in this industry are management ownership, institutional support, trading liquidity, and analyst coverage. Arizona Metals, even though we've raised, close to 90 to 100 million Canadian dollars, only 116 million shares outstanding right now. No warrants outstanding, so there's no warrant overhang. And of the 7.6 million options, those are all owned by management and directors. And management and directors have a substantial position ourselves. We own 12% fully diluted, and then that's followed by high net worth and institutional investors at 18% and 26%, respectively. So 116 million shares, but a relatively tight float with, we also think, very good liquidity for an exploration stage company. We trade an average of 200,000 shares per day combined on the TSX and on the OTC. And we're always looking for ways to increase that, and one of those is to get analyst coverage. So right now, 7 analysts cover AMC. They have target prices ranging from $7 to $10 per share, and all those targets are based on the K mine deposit alone. Very little value ascribed to the expansion potential at K or to the surrounding targets. And we've identified at least 18 surrounding targets, which we think have the potential to be as good or even bigger than K. And then the second asset, Sugarloaf Peak, hasn't been the focus, but we are, as I mentioned, we'll get into some details. We're looking at creating some value with that deposit too. Key factor for any exploration deposit is location, and we are in Arizona, one of the best states in the United States for mining, and one of the best areas in the world. Arizona is a leading producer of copper in the United States. We're only an hour north of Phoenix. We're in a very mining-friendly county, Yavapai County. This county has a long history of underground mining, especially of VMS, the exact type of deposit we have. We're at the southern end of a 150-kilometer-long trend that hosts 60 past-producing high-grade VMS deposits, very similar to K. These deposits were really what founded the mining industry in Arizona. The discovery of the United Verde deposit in the 1880s is what resulted in the building of 4 smelters, 2 of which are still in operation, and we're within 2 hours of those smelters. And as you can see from this map, many different mines in operation and all around us. But obviously key to location is also infrastructure. We're only a few kilometers from road, rail, power. And as I mentioned, we're within a couple hours of operating smelters, but at the types of grades we're seeing at K, our view is that this could eventually be shipped anywhere in the world with the kind of high grade concentrates we think could be produced here, and that the network to define those concentrates is currently underway. In terms of the deposit type, this is a high grade polymetallic VMS deposit. There was a 1982 historic resource estimate done by Exxon Minerals, and that showed a composition of approximately 40% each of copper and gold, 20% zinc, and the balance in silver. The 60 past-producing underground mines surrounding us were of similar grade and composition. And really, if you look at VMS deposits in the world right now, the high-grade copper deposits have typically been mined out, and what's left are the distal zinc-lead zones. We're very lucky that K is one of the very few remaining deposits that's got these types of extremely high copper and gold grades, but we're also seeing widths that are really, I would say, astounding for a VMS deposits. We're getting 60 to 100 meter widths at very high grades, where a typical deposit might be 3 to 10 meters wide. And I'll show you some of those drill results. Importantly, having these high grades means it's the potential for much lower relative capital and operating costs compared to other mines with similar metal output, and that means lower surface disturbance, less infrastructure, and potentially easier permitting. So you get the benefits. That the grade gives you the benefit of much less capital, much less disturbance, and also easier for social license. You're disturbing a few hundred acres instead of tens of thousands of acres, which obviously brings a lot of opposition. So slide 9, next slide here. Some of the key milestones we're looking for here are favorable metallurgy. So we have done a review of the historic metallurgical testing at the K mine deposit, and that indicated the potential to produce clean, payable copper and zinc concentrates with very low deleterious elements, most below detection limit. Detailed flotation testing is currently underway, and we have we're designing a flow sheet right now, which we hope will be representative of the deposit as a whole. Another key permit is another key milestone that we're looking for is showing the ability to permit. In Arizona, the permitting process is very much related to the type of land which hosts a deposit. So the K-Mine deposit itself is located on private land or patented ground, and the surrounding exploration claims that we're working on are all Bureau of Land Management or BLM federal mining claims. These claims give the holder the right to develop and extract, as they define, a discovered valuable mineral deposit, which I think we can very arguably say we have at K, and we're obviously looking for more in the same area right now. We've also purchased an additional 107 acres of private land located 900 meters north of the K mine deposit, and this was done primarily to host future mine-related infrastructure. And we're envisioning an underground operation with a small footprint. And very importantly, when we made this acquisition, it came with water wells and water rights, and we're currently using that water for our drilling, and we're also doing hydrological studies now to see how much of that water would need to be used for a future operation. But that's getting a bit further down the road towards PEA/feasibility type studies. And obviously in Arizona, the type of land is really the key to the ability to permit a new mine. So there have been some recent permitting issues in Arizona encountered that have been in the news, and these are typically related to deposits being on or near national forest or indigenous tribal land. So if you're on the national forest, you have to get your permit through the Forest Service, which is a much more onerous process than going through the BLM. And the K project is not on or near any national or indigenous lands, which we believe, that's a big advantage. The deposit itself is on private ground, and the lands surrounding it where we're exploring are BLM federal mining claims, which have a clear path to getting a permit, provided you do all the right things, which of course that's our intent, to show that you can reclaim everything, no pollution. But anything we do would be operated under best practices. So we get ahead here. In terms of grades, as I mentioned, this deposit is showing some really spectacular widths and grades in both copper and zinc zones. So the deposit is made up primarily of chalcopyrite, which is copper sulfide, and sphalerite, which is zinc sulfide. But with both those minerals, in both the copper and the zinc, we do see substantial gold and silver, and that's similar to what Exxon reported in the late 70s, early 80s. But the grade is obviously, for any deposit, that's the key driver of both capital and operating costs. So higher grade means less tons need to be moved to achieve the same metal output. So much smaller footprint, less infrastructure, which means potentially much lower capital costs. So, compared to an open pit, we may be talking, order of magnitude type lower capital costs. So instead of 3 billion, maybe you're looking at 300 million, which obviously makes these types of projects very attractive to mid-tier and major companies that want to add substantial output without spending billions of dollars. And it also means they have the best chance of surviving the cyclical nature of metals prices, that the high grades let you stay in operation even if prices drop. And just for comparison, I'd say underground VMS mines currently in operation typically use cutoff grades of 1 to 1.5% copper equivalent, which would be about 2 grams per ton gold. And some of those mines are operating, 3 kilometers deep. They'd also use a minimum mining width of, say, 3 meters. Well, if you look at some of our drill results, if you're using a 3-meter mining width, we're hitting zones running 60 to 90 meters. True width is around 80% of that. So still, call it 50 to 80 meter true width zones running 5 to 10 grams per ton gold equivalent. So extremely high grades. And in the copper zones, we're seeing zones running 125 meters at 3% copper, 105 meters at 2% copper. And when you have zones that wide, it gives you the opportunity for very low mining costs. So what we're envisioning is something like, probably long hole open stoping, which is one of the very low cost mining widths. And in some of these extremely wide zones, we think even there's the potential for sub-level blasting, sub-level caving type mining, which is on the order of the lowest possible underground costs. And very, very few VMS deposits around in the world that have these kind of grades and widths. Another key factor here is the orientation. If you look at the section looking north, you can see that K dips at about 75 to 80 degrees, which is also key for enabling low-cost mining methods such as long-hole stoping and even sub-level caving. There is the potential, we think, for this deposit to go well below 1 kilometer deep where we've drilled currently. The mines around us were mined down to 1.5 kilometers, but that was really just the limit of their technology at the time. So, there's no reason to think that this deposit could go much deeper, but obviously our focus right now is getting shallower, lower cost tons that would be mined earlier in the mine plan. And then obviously a key to all of these deposits is expansion potential. So since we started drilling in 2020, we've completed more than 70,000 meters of drilling at the K deposit, which are the red dots if on the long section. So the image on the right, that's a section looking east. All those red dots are what we've drilled, but you can see there's still lots of open areas where we think we can add significant tonnage. And it's open in all directions, and especially at depth. But while we think there is the potential to go much deeper, we are right now focusing at the shallow zones from surface down to about 300 meters deep, trying to add low cost tons. But from a longer term expansion potential, if you look at the LaRonde mine, Kidd Creek in Ontario, also VMS deposits, these are being mined at well below 3 kilometers deep. So once you get them up and running, there's lots of potential to go much deeper. But for the moment, we're focused on shallower holes. And obviously, in terms of the expansion, I mentioned the analyst targets currently valuation is $7 to $10 per share. All that's based on just the K deposit. We think those valuations are going to increase as we show that the K itself is getting bigger. But obviously, one of the big catalysts we're looking for with the 18 surrounding targets is to make a new discovery. So we are right now drilling 2 rigs at the western target, and we think that's where we can really drive value for shareholders. Typically, if you have one large VMS deposit, you'd expect to have potentially multiple other deposits in close proximity. And that's what we see with the deposits around us, and that's what you see in other VMS deposits around the world. So we've identified at least 18 other highly prospective targets within 1 kilometer of the K mine deposit. Because this deposit is so tightly folded and the prospective geology is so tightly folded, that one kilometer actually hosts a 10 kilometer strike length. So 10 kilometers of prospective mineralization have been tightly squeezed into a 1 kilometer area. And that's important both for exploration, but for future operation. Our view is anything we find within 1 kilometer is going to go to the same mine plan. So any discovery is directly accretive to, potentially running through the same underground operation, same plant, which means you're not adding huge capital costs by making a new discovery. We have started a 76,000 meter program to test these 18 other targets. Budget is $32 million, although right now we are running below that, but we have built in an inflation buffer. As of today, we've only completed about 2,500 meters of this program. We started at the end of February, so we've done 3% of the program. We're only on hole 6, so it's still very early stages. But the first few holes are very long holes to give us an idea of the geology, see what's underground. But yeah, we've really just got it started on the testing. But initial indications have been very good. We're seeing all the right signs in the rock that we're in a large mineralized system. We've seen the presence of sulfide minerals over large widths, including chalcopyrites or copper sulfides, sphalerite, zinc sulfite. As drilling continues, we'll be using all the available tools, including downhole geophysics, soil and outcrop sampling, spectral analysis, as well as surface mapping. And even just in the last few months, new geophysical studies and surface mapping have identified a number of new targets running north of the western and central conductors, but also between them. And we're also using drones to vector closer. So each new hole we do in the west is trying to vector into a new deposit similar to K. That's really what we're targeting. And then, as I mentioned before, another key factor for exploration companies, especially in a difficult market, is financial position. We had 49 million in cash as of our March 31st financial statements. We've budgeted 32, so we're fully funded to complete all the work we need to do. That's drilling at K, drilling the western and central targets, but also met testing at both K and Sugarloaf. And maybe just a few words. I've actually got a few questions here on Sugarloaf. So maybe just give a quick overview. So this is our second project, Sugarloaf Peak, located 2 hours west of Phoenix, right off Highway I-10. Also has a historic resource, 1.5 million ounces at 0.5 grams, which was defined in 1982. The historic resource is outlined by the purple area here. It's about 1 kilometer long by 300 meters wide. And what the key things you need for these kind of low grade deposits are good metallurgical recoveries, but also low strip ratio. And we believe we have both those at Sugarloaf. We see the deposit about 300 meters at surface. It starts right at surface, so there's no overburden to remove. It doesn't dip. It's totally tabular, so that should result in a very low strip ratio. And initial bottle roll testing has shown very good recoveries. We're seeing up to 95% recoveries in the oxide zone. But it's open for expansion. You can see to the northwest where it's letter H in that pink area, that is all area that's got the same geophysical signature as the historic resource, but it's never been drill tested. And the same to the southeast. So you can see you've got more than double, almost 3 times the strike to test that's never been drilled. So it's open on strike. There's very good potential to make it bigger on strike. And then on this slide at depth, you can see the green outline. That's the historic resource, which was defined to only 70 meters deep. We've actually drilled holes that are showing mineralization, gold mineralization, down to almost 600 meters deep. Now, obviously, the question is, if you go that deep, is it recoverable? So we have done tests on the oxides, which are showing very good recoveries. And right now, the sulfide mineralization is undergoing flotation testing to see, could that area below the deposit be recoverable? And if you just look at the numbers, if you got defined 1.5 million ounces down to 70 meters, but we're seeing mineralization at 7 to 8 times that depth, and you've got the potential to double the size on strike, the numbers get very much bigger than 1.5 million ounces. But what we are doing, we're waiting to see the outcome of those sulfide met tests, which are underway right now. And I've got a question here actually about Sugarloaf. Somebody asked, do we plan to monetize Sugarloaf to fund the K deposit? Well, really, our thoughts for Sugarloaf are that we want to spin it out to our shareholders. So if you own a share of AMC, you would get some fractional share of NewCo, and that way the shareholders maintain the value. And we also wouldn't be drilling it. We wouldn't be drilling it with the money that we've raised for K. We'd raise money separately, and that way we're not diluting our K shareholders, but they still maintain the value in the project. So Sugarloaf is fully permitted. We're just waiting for market conditions to be right. We want to spin it out in a strong market. And another question, we've had quite a few questions, are in terms of the resource for K, are we waiting to complete the drilling at the central and the western targets before we put a resource on K? Well, the answer is no. We see the other targets as discrete from K. We have one drill right now just working on testing K, looking for shallow tons. And central and west would obviously be separate. But in terms of the drilling at K, the focus right now is to make the resource as big as possible. So we've got a number of targets where we think we can add tons, and we don't want to put a number on it yet while we see this expansion potential. We want to show the market that this, we want to show a large, robust deposit. The grades are already excellent. The widths are excellent. the goal is to make it as big as possible, and we've got lots of shallow, high priority targets that we are currently drilling to add into an eventual resource, but they wouldn't be tied to completing the drilling of the central and the western targets. Yeah, we have a question here about a royalty. As you know, as we mentioned a number of times, the K mine deposit is very unusual in that there are no royalties on K itself or any of the surrounding claims, and that's just a function of the history of the deposit. When Exxon left the deposit, they left the royalties too. So typically, you'd expect to see a 2 to 5% royalty on most deposits around us. K's got 0, so obviously we think there's that leaves us some options for future value extraction, but we'd only structure something that would be beneficial to our shareholders, and anything in regards to a royalty would be subject to a shareholder vote. Luckily, we're fully funded, and we don't need to go towards a royalty to fund our current exploration drilling. So I'm just going through the questions here. I got a question here. Please expand on the phrase, "we're on the edge of a volcano." I think that's referring to my comment on what we've seen at the western target so far. We're seeing all the signs that we're in a mineralized volcanic system. That's what you're looking for at K. So at K, you have your copper gold core at the center, and as you move away, you'll see graphite and zinc. You'll see different kinds of structure in the rocks, which tell you that you're getting closer or further away to the heat source. So at K, it was very simple. The deposit came to surface. It was easy to find. Central and west, we're looking for targets that are blind, that don't come to surface. Obviously, we have geophysics, geochem to help us. But with each hole, we're trying to vector close to where are we getting closer to that volcanic heat source where we expect the high-grade mineralization to be. As I mentioned, we're 6 holes in. We're pretty early in the program, but we're getting lots of good information with each hole that we're now trying to vector, closer to what we hope is one or more discoveries. Just see, I'm going to have time for another question here. I think that's it. We're going to be out of time, so I just thanks to the audience for attending, and we will be posting details of our next update webinar sometime during August. We'll put it on our website and social media and a press release too. So thank you again, everyone, for